In this video, we will be learning about the T account and the double entries involved in order to record provision for depreciation on any non-current asset, right. So, this part of depreciation is highly interesting, and not only is it interesting, it is very important as well. So, in order to understand about the double entries and the way the T account of depreciation is constructed, we first have to identify, understand the nature of provision for depreciation. And what you have to remember now is that, very important, that the nature of provision for depreciation account is that it is a contra asset account. What do I mean by contra asset? Now, contra over here means that this account is maintained to reduce the value of its related account, right. And with relation to depreciation, what is the related account? Of course, the non-current asset cost account, right. We are reducing the value of non-current asset by charging depreciation on that asset. So, that is why provision for depreciation is classified as a contra asset account, just like drawings is classified as a contra capital account because it reduces the capital of the business, right. So, now keeping this in mind, that the nature of the depreciation account is that it is a contra asset account. So, any increase or any decrease in this account, that is the provision for depreciation account, will be recorded on the opposite side than the related account of non-current asset. This is how a contra account works, right. Now, what do I mean by this? In simple words, any increase in the account balance, right, of the provision for depreciation account, of course, provision for depreciation account would be recorded on its credit side. We know that any increase in an asset account, be it non-current asset or current asset, but in this case, of course, non-current asset, because we charge depreciation on non-current assets only, any increase in non-current asset account is recorded on the debit side. But contra accounts works on the opposite, in the opposite way. That is, any increase in the provision for depreciation on any non-current asset would be recorded on its credit side. Let us just do an activity so that you get a very good understanding of how an asset and a contra asset accounts work. So, first of all, we know that balance brought down on any asset is written on the debit side. But if we have the balance brought down for contra asset, that will be written on its credit side, right, contra, the opposite account. Similarly, if I am purchasing any new non-current asset, so that I will record again on the debit side to show an increase in its account balance. But if I am recording depreciation in a contra asset, that is in the provision for depreciation account. So, depreciation, by recording depreciation in my provision for depreciation account, I am increasing its account balance, the depreciation account balance. So, this will be recorded on the credit side of that account. And lastly, if I have the balance carried down for an asset account, that we know will be recorded on the credit side, the opposite side. And if I have the balance CD for the provision for depreciation account, that will be recorded on the opposite side, that is the debit side. So, this is how we record the opposite entries on the in a contra asset account. Now, let us move to the T accounts of non-current asset and provision for depreciation account, so that you get an understanding that what am I saying over here and how is it recorded, how is it shown in the T account. So, first of all, if I have the balance brought down for any non-current asset, that I know will be written on the debit side, right. All the assets have balance brought down on the debit side. Now, suppose that during the year I am purchasing new non-current assets, be it on cash or bank or on credit. So, that will be recorded on the debit side, right. If it is through cash or bank, so cash or bank credit, and my non-current asset account will be debited. So, this will show an increase in its balance. And lastly, if I want to balance this account, so the balance CD would be written on the credit side. All the non-current assets or all the current assets have balances carried down on the credit side, that is why they become a debit balance for the next month, right. So, this is how a non-current asset account is prepared. Now, let us move towards the provision for depreciation, or let us say a contra asset account. So, we know that we have just studied over here that this is the opposite of the asset account. So, the balance brought down of your provision for depreciation account will now appear on the credit side. So, balance brought down is on the credit side for provision for depreciation account. What is balance brought down over here? This is just the accumulated depreciation coming from the last year end, right. And what is accumulated depreciation? We have studied as well that accumulated depreciation is the current year depreciation that goes in the income statement. Now, since this is the balance brought down, so this would be the depreciation calculated at the year end of last year, at the last year end, right, plus all the previous year's depreciation. So, this is the balance brought down, right. Now, the current year depreciation, the current year depreciation that I will calculate will be shown as an income statement figure, because it will be recorded in the income statement as an expense, right. So, now since after this accumulated depreciation brought down, I am again calculating depreciation. This means that I am increasing the balance of my provision for depreciation account. Now, since it is an increase in this account balance, this will again be shown on the credit side. Any increase in the contra asset account is shown on the credit side. However, any increase in an asset account is shown on the debit side, right. Now, I have the balance brought down, I have the current year depreciation figure as well. What do we do at year end? We again calculate the balance carried down. And what is balance carried down? This is all the accumulated depreciation, which means that your balance BD figure, balance brought down figure, plus your current year income statement or current year depreciation figure. That is why it is called the accumulated depreciation. This will come on the debit side of your provision for depreciation account, right. Balance carried down for an asset account appears on the credit side, but this will appear on the debit side of your provision for depreciation account. Now, this is a very simple and easy to remember sort of format for provision for depreciation, right. If you just remember the link between an asset and its contra asset account, you can easily remember the double entries as well, which we will be learning about in a minute, right. Now, there will be just one more addition when we will be learning about the disposal of a non-current asset. There will be addition in the provision for depreciation as well as the non-current cost asset account as well. But for now, let us move towards the provision for depreciation double entries, right. So far we have learned that provision for depreciation is a contra asset account, and not only is a contra asset account, not only is it the account is prepared in a way that how a contra asset would appear, it is also an expense for the business. We have already discussed this when we were discussing the accounting concepts that are applied while calculating depreciation. So, this is an expense as well. It is charged against the use of the non-current asset. Now, since it is an expense, it will be recorded in the income statement as well. It should be recorded, right. It is a fall in the value of a non-current asset. So, this is an expense for the business. That is why we used to record over here as a credit entry in the provision for depreciation account. Now, since it is an expense, this should be reflected in the double entries for depreciation as well, right. So, this is the double entry that we make when we calculate depreciation for current year. First of all, income statement will be debited, right. It will be debited. Now, why do I debit my income statement, right? Why? This is because we know that since it is an expense, and all the expenses or all the losses, let us say all the costs as well, they are debited in income statement, right. Anything that is debited in income statement reduces your profit. So, that is why it shows a reduction in the profit by debiting the current year depreciation calculated at the year end. It is recorded as a debit entry in your income statement, and provision for depreciation is credited against it. Now, with what amount should I make this double entry? The amount that I calculate at year end for current year depreciation only, that is calculated after applying the percentage on, let us say, on cost if it is the straight line method, or on the net book value. So, only current year depreciation, first of all, only the current year depreciation is recorded in the income statement. Now, why is that so? This is because we know that income statement is an yearly statement. So, only the yearly revenues and only the yearly expenses or incomes are recorded in the income statement. So we do not, okay, we do not record the accumulated depreciation in the income statement. We don't do that, right? We just calculate the current year depreciation and we make the double entry with that value. That is why in the provision for depreciation account we credit it with the amount that is calculated at the year end for current year only, and we credit it with income statement because income statement is debited against this expense. So please make sure that you remember this, because then if you do not remember this, then you might end up making double entries for wrong figures, your account balance will be different, everything will change. So what is the double entry? We debit income statement. Why? What is the logic? It is an expense. We know all the expenses are debited in the income statement, and we credit the provision for depreciation account. Why do we credit it? Because we know that this will increase its account balance, and any increase in account balance of a contra asset account will be recorded on the credit side, and the entry is made with the current year depreciation only. So let me just give you a recap of provision for depreciation account. First of all, you write the balance brought down, which appears on the credit side, right? Credit side, opposite side. Then for current year depreciation only, we make the double entry by crediting provision for depreciation and debiting income statement. So only current year depreciation is recorded in the account as this figure, right? As this with the name of income statement. Then we add these two figures so that we have the accumulated depreciation, right? This is the accumulated depreciation. This is calculated by adding balance brought down with the current year income statement figure which for depreciation, and this is the value that goes in your statement of financial position as well, right? We will be learning about the extract that is there for provision for depreciation. We will be learning about that as well. So balance carried down then is calculated at the year end, which is by adding these two figures. So far what have we learned? Let's make a summary. So far what have we learned about provision for depreciation, its T account and the double entries. So first of all, provision for depreciation is what? It is a contra asset account, right? Not only is it a contra asset account, but also it is an expense as well. So in order to record an expense, we make the double entry at the year end for the current year depreciation only. And what is the double entry? Can you recall? The double entry is to debit the income statement, right? And we credit the provision for depreciation account. Thirdly, double entry is made with what value? With the current year depreciation only, right? Only the current year depreciation goes in your goes in the income statement, right? Now, this is all about current year depreciation. What about the accumulated depreciation? What is accumulated depreciation? This is the balance carried down figure which is calculated by adding balance brought down with the income statement figure for depreciation. This is the balance carried down figure, and where does this figure appear? This appears in the statement of financial position, right? This balance carried down, the accumulated depreciation is subtracted from the total of the non-current assets, right? But again, we will be learning about this concept. So this is all about the T account, the double entries for in order to record the provision for depreciation. In the next video, we will be solving an example so that you get a really good understanding that how double entries are made, what figures appear in income statement, how do we take them to the T account, and then what happens next, right? So see you in the next video.